day and welcome to the Mrs. Bectors Food Specialties Limited Q2 and H1 FY2024 earnings conference call. As a reminder, all participants' lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this call is being recorded. This call may contain some of the forward-looking statements which are completely based upon our beliefs, opinions, and expectations as of today. These statements are not a guarantee of our future performance and involve unforeseen risks and uncertainties. I now hand the conference over to Mr. Anup Bector, Managing Director. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. On behalf of Mrs. Bectors Food Specialties Limited, I extend a very warm welcome to all participants on Q2 FY24 financial results discussion call. Let me take this opportunity to wish everyone a very happy and a safe Diwali. Today on this call, I have with me Mr. Manu Talwar, our Chief Executive Officer, Mr. Ishan Bector, Whole-Time Director, Mr. Suvir Bector, Whole-Time Director, Mr. Praveen Kumar Goyal, Whole-Time Director. We also have Orient Capital with us on the call, who are our Investor Relations Advisor. I hope everyone had an opportunity to go through our investor deck and press release that we have uploaded on exchanges and on the company's website. It gives me immense pleasure to announce that Q2 FY24 has been another strong quarter for us on the revenue as well as the margin front. Our revenues increased by 19% and PAT by 70% on YOY basis. We have overcome multiple challenges across the domestic and international markets to give another stupendous quarter of growth and margin expansion. Our continuous focus on distribution expansion, investments in our brands, Cremica and English Oven, long-standing relationships with our large institutional players, and focus on growing exports with existing and new customers, along with focus on margin, have helped us to deliver sustainable results. Company's focus on onboarding experienced and focused leadership team, strengthening of input KPIs, addition of distributor sales representatives, and digitization initiatives of Salesforce automation and distributor management system has helped us in increasing the distribution width and better servicing to our outlets and channel partners. We continue to invest behind strategic marketing initiatives to build long-term sustainable growth. We recently signed our first brand ambassador, Kareena Kapoor Khan, and have plans to build reach and awareness through TV media alongside print and digital marketing initiatives. In the current year, we have commissioned 2 new lines of biscuits with a capacity of 2,000 tons per month. This will help us in meeting our demand and efficient serviceability. Now I will discuss the financial performance. Starting with biscuits. Our biscuit segment reported a revenue growth of 25%, which stood at INR 259 crores in Q2 FY24 as compared to INR 206 crores in Q2 FY23. This segment has grown by 76% over Q2 FY22. Our domestic biscuit segment and export witnessed higher double-digit growth in Q2 FY24 as compared to Q2 FY23. Bakery. Our bakery segment's revenue for Q2 FY24 stood at INR 140 crores against INR 125 crores in Q2 FY23, thus registering a growth of 12% Y-on-Y basis, including retail bakery and institutional segment. This segment has grown by 69% over Q2 FY22. The consolidated revenues for the current quarter stood at INR 415 crores versus INR 347 crores in Q2 FY23, thus registering a growth of 19.3% on year-on-year basis. EBITDA stood at INR 65 crores, resulting in a growth of 46% and 12% from the corresponding quarter on year-on-year basis and sequential basis respectively. EBITDA margins for the quarter stood at 15.6%, that is a growth of 281 BPS year-on-year basis and 11 BPS on sequential basis. PAT stood at INR 37 crores and saw a growth of 70% year-on-year basis and 7% on quarter-on-quarter basis. Our PAT margin for Q2 FY24 was 9%, registering a growth of 268 BPS on yearly basis. Moving to H1 FY24 financial performance, the consolidated revenues for H1 FY24 stood at INR 789 crores versus INR 648 crores in H1 FY23, thus registering a growth of 21.7%. EBITDA for H1 FY24 stood at INR 123 crores versus INR 76 crores in H1 FY23, with margins of 15.5% as compared to 11.7%, resulting in a growth of 387 BPS year-on-year basis. PAT for H1 FY24 more than doubled from INR 35 crores in H1 FY23, now stands at INR 72 crores with improvement in PAT margins to the tune of 380 BPS year-on-year basis. Our focus remains on distribution and premiumization, supported by marketing to penetrate and capture newer markets. This will assist our company to increase its footprints not only in North India but also penetrate in western and southern parts of the country where the product is equally liked by the consumer. With this, I would request to open the floor for question and answer. Thank you so much.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star then one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star then two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from Sashwat Jalan with Purnartha Investment Advisors. Please go ahead.
Thanks. Congratulations, sir, on a great set of numbers. I just had a couple of questions. Firstly, have you taken any price hike in the biscuit or the bakery segment in the last 2 quarters?
Yeah, Manu, it's your turn. Yeah, please. Sorry.
Yeah. No, so we haven't taken any price increase in this particular quarter or the H1.
Sure. And sir, can you also please share with us any B2B, B2C revenue split?
Can you be a bit louder? Your voice is not very clear.
Yes, sorry. So I was just asking if you can share with us the B2B and B2C revenue split if possible?
So we normally on the call don't share B2B and B2C revenues. We share as we have shared, basically what's the overall biscuit segment and bakery segment revenues.
Right. And lastly, in the annual report for 23, there was a small job work charge. So are we also outsourcing manufacturing?
You see, outsourced manufacturing as a percentage to revenue will, because we are focusing primarily on our own brand business, both B2B and B2C, and not expanding on the contract manufacturing side, which is primarily only we are doing for Mondelez. Right? So as a percentage to revenue, as we grow faster for our own brand, so that as a percentage to revenue, you would see a minor decline, but on a value terms, it is constant or growing at a small percentage.
Okay, so I thought the job work charge is for our own biscuits, but thanks for the clarification.
Job work charges for our own biscuits.
I assume that to be the case, but thanks for the clarification, sir.
Yeah. This is for on the revenue side.
Okay. And lastly, sir, since you had announced a capex on the R&D side, so that's quite exciting to hear that in the annual meeting. So can you share any focus areas we are heading, or any comments on that?
So our overall capex, we are primarily, as we have given the details earlier also. So on the overall capex, one is that we invested in our own plant in Rajpura. We invested in 2 lines which were commissioned in the Q2 of this financial year. And then the other big investments on the biscuit side we are doing is in Indore, MP, where we are investing in the plant, and that plant would get commissioned in the next financial year. On a bakery side, we have invested in a plant in NCR, which is in Bhiwadi, and that plant would get commissioned in this particular quarter, which is Q3 of current financial year. And then we have building up another state-of-the-art plant in Khopoli, Maharashtra. This is again a bakery plant, and that would get commissioned in the next financial year. So these are some of the large investments which we are doing on the biscuit and bakery side on the capex to expand our capacity to service our demands.
Right. Thanks for taking our question.
The next question comes from Amit Purohit with Elara. Please go ahead.
Yeah, thank you for the opportunity and congratulations, sir, for excellent numbers. Sir, on the biscuit growth, which has been very strong at 25% plus, what you would attribute this growth to? Is it both existing as well as new markets? I'm sure both would be doing well, but within existing market, is it like a distribution-led growth, or is it more to do with line selling also now started to come in where in the segments that or the retail outlets you have already entered, you are able to sell a full offering or complete portfolio?
So Amit, this growth is primarily led by distribution and supported by marketing. When we exited last quarter of the last financial year, which was March of 23, we were around 216,000 direct reach outlets, right? And now in these 2 quarters, we have already touched 270,000 direct reach outlets. And our AC Nielsen number of our overall reach has crossed 6 lakh outlets. So, we have increased our reach in the distribution. B, we had already implemented SFA, which was Salesforce Automation, last financial year, and this year we are implementing DMS with partnering with Votary. So we have already reached 400 distributors on the DMS implementation, and we are in the final leg of implementation for balanced distributor and the final modules on that side. So to make this happen again, we have increased our distributor reach. So we have added more number of distributors, and also very importantly, right, other than distribution, we have worked on premiumization. So there is over 15% improvement on the premiumization over the last financial year. So distribution led by premiumization and the marketing led support. So we continue to drive marketing alongside sales on both on shop, in shop, outdoor, print and digital media. And while in the coming quarter, this quarter, we will, as you're very well aware, that we have signed the first brand ambassador, Kareena Kapoor Khan, and we will be now moving our journey to move towards the television as a channel for the media also. So these are the efforts which are being made to drive the growth on the biscuit side. And the biscuit side growth which you see there is both for domestic business as well as exports. So also on the exports, which is doing well for us, we are doing and adding a substantial amount of business with our existing customers and as well as adding new customers. So this is a brief, response to your question on what is fueling growth on the biscuit side.
Sure. And sir, just on this biscuit itself, any price reductions that you have taken, or much of, because most of this pricing would be anniversarizing, right? So of the 25% growth, is it safe to assume that 20% would be volume led, or how do you think?
Yeah, so you're very right. Majority of the growth is volume led in this, right? So almost over 75% of the growth in this is led by volume.
And have we taken any price reduction? Because we keep hearing the leader also talking about increased competition.
No, so it's very important in biscuit domestic market to to keep seeing how the competition, especially the leaders, taking it forward. So we ran some consumer promotions, right? We ran the promotion on the premium biscuit side, right? And that's what we did for the consumers. So kind of you can say as a consumer offer, we did give the kind of price offer in form of a consumer offer.
Okay. So, and when was that implemented? In the
so
last
we
one
did
month?
that in quarter 2.
Okay.
Right.
So full of quarter 2 had this impact.
Yeah. So quarter 2 we ran our consumer promotions.
Okay. And second point on the ad spends and margins. So basically you highlighted what would be the broader ad spend in first half as a percentage of sales? Would you be able to share?
If I would say percentage to B2C sales, which is both on English Oven and Cremica brand side. So our overall spend, right, both BTL, ATL continues to be around 8%, but yes, definitely on a ATL side, we have moved up and we are approximately 3.5% now on a ATL, as we briefed earlier also that we'll continue to keep investing more in our brands.
Okay. And sir, any outlook on the margin side? We've been this quarter has also been a strong performance, and in the context that how is the raw material basket for us, and how do we see any change in the guidance you were talking about earlier, 14-15, and then what is the outlook for margins should we build in?
So before I hand it over to Anup for the commodity side, but on the margin side, as we have been maintaining that we kind of achieved 14% over the last 2 quarters of last financial year. And our whole endeavor was to maintain the margins in the range of 14 to 15%. And that's kind of what we have delivered is 15.5% in the first 2 quarters. But yes, our endeavor is to keep around 15% consistently over the next coming few quarters. So anything between 14.5 to 15% is what we want to consistently deliver in terms of margin over the coming few quarters. And on the commodity side, Anup, would you like to brief on the commodity?
Yeah. So, on the commodity side, there are certain challenges. We have some benefits, like the oil prices are low, but we do have some challenges where on the wheat side where, the prices are a bit on the higher side. But definitely, as Manu has said, our aim is to maintain our target, which we've always been committing it to be around between 14.5 to 15%. And, our company is on the build-up stage. So we are going to be building up, investing in distribution, keep investing on the brand. So, but we will retain our targets, what we have been committing to our investors on a 14.5 to a 15% sort of, markets. And in case, biscuits is an industry where definitely, if there is a price increase which is going to impact us, then there are price corrections happening and things like that. So at the moment, in the last 2 quarters, we have not seen anything like that because we have seen overall things under control. But going forward, I do not foresee any much, in the short term, you could have some challenges, but over the long term, we do not feel there are any challenges to maintain our targets of margins, what we always stood to.
Thank you very much, gentlemen. We kindly ask for each participating analyst to ask 2 questions each, so all participants will be contemplated during the question queue. If you wish to ask another question, please go back to the question queue. Thank you. The next question comes from Ari Hunt with Bowhead. Please go ahead.
Good afternoon, sir. Am I audible?
Yeah.
Yes, sir. Thanks for taking my question. So my first question is that our employee cost has increased in the last 2 quarters. So what would be the reason for the increase?
So our employee cost first had a reclassification of some expenses which were coming in other expenses. They moved to employee expenses. So if you will notice particularly, our other expenses are down and you see an increase in employee expenses. So that is the one reason for that. Secondly, as we have been indicating that we were doing a leadership hiring, right, over the last 3 quarters. So that's kind of reflecting in some part of that increase. Now we are through with our leadership hiring and we should be able to kind of consistently maintain. But in a growth company like ours, and I'm sure you will appreciate it was important to get the organization ready for the future growth. And thus we needed to strengthen the organization at different levels. And that's what we did it.
Okay. And sir, my next question would be, sir, the bakery growth has slowed a little bit. So is it because of capacity constraint? I mean, do you see it as a temporary blip or it is something structural?
Ishan, would you like to answer?
Yeah. So on the bakery side, we have our Bhiwadi plant, which is actually coming up in this quarter in Q3, pending which we had held back some new territory expansion, which we will start progressing with again. So that will definitely add to our growth outside of our core market of Delhi NCR. I think secondly, what we also did witness in the past quarter is we were also coming up of a very high base, so I think that is the effect of that. But going forward, we are focusing on distribution expansion. We are continuing to open up outlets as per our targets, and we are confident that over the long term we will be achieving a mid to high teen growth rate.
Okay, sir. And what you expect the runaway growth for the next 3 to 5 years to be because of the distribution and capacity expansion in biscuits and bakery?
So, as we have already maintained, we want to consistently achieve mid-teens kind of growth over the next few years, and that's the endeavor.
Okay, thank you so much, sir.
Thank you. The next question comes from Kaustubh Pawaskar with Sharekhan by BNP Paribas. Please go ahead.
Yeah, thanks for giving me the opportunity and congrats for a good set of numbers. So my question is on biscuit segment. As you mentioned that 75% of the growth is because of the volume. So if we consider 5 to 6% kind of a realization growth, how much is because of the premiumization?
It is primarily because of premiumization. Premiumization, as we said earlier, has over the last year improved by over 15%. So this is primarily what you see in the price side. This is led by the premiumization.
Okay. And so can you help me understand how is expansion happening in some of your newer states where you have you have entered last year or maybe a year before that in terms of biscuit business, because though that was also one of your key driver, because you wanted to enter into newer markets to gain share, and that is how you were planning to grow in the coming years. So if you could highlight on that.
So we did started our journey south and by Bangalore, right? And this year we've gone further, moved from our presence in 3 cities to now close to 15 cities. So we did add few more cities in Maharashtra. We did launch in city in Gujarat, Goa, Telangana, and Andhra Pradesh, and Karnataka. So yes, pressing now the south and west is the initial start of the thing, because we just have there for a little over a year now, and continue to expand in south and west. And that's the reason we are putting up a plant in Indore, which is central part of India, so that to service south and west markets of its.
Right, sir. Right. So the plant in MP would largely help you to expand further into the southern and western markets.
Yeah, southern, western, and central part of India.
Okay. And this strategy will continue. You will continue to add more and more cities as you grow ahead.
Yes.
Okay. And sir, any target in terms of market share you are looking for? Maybe not immediately next year, but over the 3 years, any particular target we have in mind that we should achieve this much market share?
With the kind of investment we are doing on the distribution side, already that we will from 2,000, we want to go to 2 lakh, 3 lakh 10 to 3 lakh 20,000, which is addition of almost 1 lakh and 50% of our direct reach. With the aggressive growth and further supported by implementation of DMS, which is distributor management system, and we can take the distributor both in the secondary stocks and other things. Our aspiration is to keep growing our market share. Over the last 1 year, we have grown our market share from 4.1 to 4.4%. Also, it's a very competitive market, but yes, the whole aspiration is that we keep moving up the market share ladder.
Right. Thank you. Thanks for the understanding, and all the best for you.
Thank you.
Thank you. The next question comes from Harit Kapoor with Investec. Please go ahead.
Hi, good evening, team. Just for, one question on the premiumization bit. So, if you could just expand in biscuits, what are the spaces in where the growth that you're getting is so much faster, which is driving this significant premiumization? Some examples in terms of category brands that you've been able to, grow at a much faster pace.
So, basically, as I said, that in a premiumization, we have moved up more than 15% over last year, and our key focus remains on premium cream and cookies, which are anyway a faster growing segment, and they are definitely showing a much higher growth to us in our sales mix also.
And second thing was on the distribution expansion. So you spoke about South and West and how MP will help you, the MP plant will help you. But if you look at outside the core markets in the north, Rajasthan, UP, some of those markets where you've expanded over the last, say, 1 year. Could you just give a kind of report card sense of how some of those states have done for you, your level of your comfort and how you've grown there. Something around that would be helpful.
So large part, you see, we were always strong on the upper north, which is Punjab, HP, Haryana. We have a high market shares in Punjab and HP, JK. So our entire focus or large part of focus has been to build the lower part of north, which is probably a belt of Delhi, UP, Rajasthan, and then the central states like Bihar and MP, right? So yes, so the large part of distribution expansion in terms of outlet which you see, right, which has also moved up from 216,000 to 270,000 in last 6 months, is happening in the lower part of the north belt, which is UP, Rajasthan and Delhi, right? And that's how we are expanding. That's where we are also expanding in the number of districts. So if you look at the districts where we were kind of present, so we have moved up from a last financial quarter, we were at 269 districts. And now in the 6 months time, we have moved up to 331 districts, so which is obviously addition of almost close to 18-19% of addition in district presence also. So this the prime part of expansion which is happening here, because our upper part of north is very well covered, right, is happening in the lower part of north, which is UP, Rajasthan and Delhi belt.
And your level of comfort with the kind of early throughputs you've seen over the last 6-9 months in some of those stores, any sense on that?
No, we don't have any concern. We've been moving well. We have also expanded our feet on street, which was at 900 by end of the last financial year. Now we are sitting at close to 1,200. That's the number we wanted to achieve for this financial year. So distribution plays a very key role in terms of driving not only the geographical presence as well as the growth, duly supported by strengthening a brand through different sources of marketing. So we are on that journey, and we will continue on that journey for next many years to come.
Got it. And you mentioned something about DMS. I was wondering, about 18 months back, 24 months back, you made some changes there, to a third-party platform, etc. Since then, has there been any kind of incremental change which has happened on the DMS side?
So DMS, actually, we started the implementation of the DMS in the starting of this financial year. So far, we have reached 400 distributors. There are 2 key modules which are being implemented as we talk. The implementation started in November. We see the whole DMS stabilizing over the next 2 quarters, and we should see a substantial benefits of DMS coming in the next financial year.
Got it. And the last question was for Ishan. Any call out on on the QSR part of the business? It seems like those numbers, at least from the QSR companies, is a bit slower in terms of growth. So, what are you seeing there in your conversations with those buyers, and any kind of growth impact that you could see on in the near term, at least there?
No doubt that sales have been, slower than expected on the QSR front. And, given our exposure to some of the larger customers, whose results, you are also referring to, growth seems to be muted, but I feel this is, a very short-term phenomena. We have, been speaking with our partners who are very bullish on store growth, adding new number of stores. So we see this, entire QSR ecosystem to be very robust in the long term. And, going forward also with some new products for us, opportunities of expanding business are immense, So I would say that whatever we see is more, on the short term. We can also see that we are expanding our capacities in terms of the capex that we are doing on the bakery side, some of which is also for the QSR, right? So we are not, concerned on the growth.
Fantastic. Wish the team a very happy Diwali. Thank you.
The next question comes from Arun Marotti with Sublab Research. Please go ahead.
Yeah, hello. Am I audible?
Yeah.
Thanks for the opportunity, sir, and congratulations for the great set of numbers. Sir, my question is with regard to the arrangement we have with the Walmart. So if you can throw some light on that, that would be quite helpful. That what kind of current supplies we have and the size of opportunity we are looking for.
I would request Suvi to take that question. He had export business.
Sorry, I think I couldn't hear the question.
Suvi, I can take it. It was a question about Walmart. What is the potential of Walmart on business?
Okay. So hi. So I think Walmart has a lot of potential. This was only our first year working with Walmart. Walmart currently is the largest retailer in the US, having a market share of upwards of 30-35%, with a store count of close to 4,800 stores to 5,000 stores. And I think we are meeting a lot of Walmart senior leadership just to establish a stronger relation with them and possibly, get into a stronger path with Walmart for many more years to come. So I would say this is the start with how big Walmart is and the size of Walmart. I think there is a lot of potential to grow and a lot of headroom for that. Yeah, I hope that answers.
Okay, sir. And on the capex side, sir, is all the timeline which we have decided earlier also. So capex plan is running as per that timeline or any modification on that?
No, it's running as per the plan. As we said that we had a plan for Rajpura lines getting commissioned in this year. Both the lines of Rajpura, which we started last year, have been commissioned in this quarter. We invested in NCR bakery capacity, and we had a plan of commissioning in this quarter, and that will be commissioned in this quarter. And then there were two other large investments, other than the many small investments, which were Khopoli for bakery and MP Indore for biscuit. Both are scheduled to be commissioned in the next financial year, and they are going as per the plan, and they will be commissioned in next financial year.
And sir, my last question on the recent development on the marketing side for the engagement with the Kareena Kapoor. So because of that particular arrangement, what impact we can see on our marketing expense, sir?
So as I said earlier also that we had an intent to keep investing more on the ATL side, and in this quarter also we have invested higher on a ATL. We are on the B2C side of revenue. We are around 3.5% now, and that trend would kind of continue because objective is to step by step keep increasing our investment on the brand marketing also.
Thank you. The next question comes from Ashish Upganlawar with InvestQ Investment Advisors. Please go ahead.
Yes, thank you for the opportunity. Sir, is it possible to bifurcate the growth of H1, which I think is around 20% plus on the revenue, between the new distribution initiatives versus the growth of current with earlier business, stronger rate?
So on this question specifically relates more to domestic biscuits, and our 70% of a growth is coming from existing outlets, which existed as on 31st March of 2023, and the balance 30% growth is coming from new outlets. So that's how that should kind of answer your question, that how from the source of growth, how much growth is coming from existing the outlets which existed as on March exit of last financial year, and how much coming from new end.
Okay. So is it possible to build it further? In the opening remarks, I think you said that around 14-15% annualized growth that we are targeting for the next few years. So is it possible to lay a strategic path to the journey that you are talking about into the more contributions from the expansion into lower north that you said, then west, south, etc. you mentioned, plus export opportunities and regionalization? I mean, it is a bit difficult for us to comprehend how this growth boils down to 15%, or it can be more than that because of all these initiatives.
So I think also that our almost 75% growth was led through volumes and the balance through premiumization, and the volume-led growth is entirely led by the distribution. Again, where I gave you bifurcation that out of this distribution-led growth, 70% of growth came from existing outlets, and balance came from the new outlets. So this journey of expanding distribution, as you see, we clearly stated our intent in the April of 2022 that where we were present in 160,000 outlets, and we said over the next 2 years, by March 24, we want to double. By March of 23, we reached at 216, and we will be reaching around 320,000 outlets by March of 24. And why start the plan now, next 2 to 3 years in terms of distribution? So we will be happy to share the last quarter of the financial year that what is the plan like in terms of distribution expansion for the next 2 years. So in terms of source of growth, the biggest driver will always remain distribution and duly supported by brand marketing. So these two are the large levers which will help. The DMS which we are implementing, because last year we implemented SFA and we clearly saw the results coming out of the SFA in terms of monitoring the large sales force or front line of almost 1,200 people now. So DMS will further integrate distributors with us, whereby we will be able to monitor, drive their secondary sales, improve their stock availability, and streamline other things also. So which will further, strengthen our distribution and execution effort, and we will see majority of those results coming in the next financial year. So this is how I see both distribution, technology, marketing, supporting the sources of growth on the biscuit side.
Okay. Sir, my limited point was that should it be assumed that the current strong geographies for us can organically grow at maybe 7-8% on volumes, and then since you mentioned 15, so the assumption is that incremental growth of 7-8% that gets added, that comes from the newer initiatives on distribution, or can it be higher because the territories that you have still not covered are pretty large, and the placement placement efforts there and acceptability, if it happens, growth could be in the range of maybe 20% and not 15%. Is it possible that way, or we are going too far?
So current our forecast, which we have stated again and again, with all the efforts on the distribution, technology, marketing side we are seeing, we would like to consistently achieve a mid-teens kind of growth over the next few quarters. Right.
Sure. And margins, you will stick with that 14-15% band?
Yeah, 14-15% band. Very right.
Sure. Thank you, sir.
Once again, if you wish to ask a question, please press star then 1. The next question comes from Rajit, an individual investor. Please go ahead.
Good evening, sir, and congratulations on a great set of numbers. I just have a couple of questions. One is, a lot of companies that have declared the results over the last 15-20 days have highlighted challenges in the rural segment. Do you see similar challenges for our company as well? And is it possible for you to share the split between rural and urban sales?
Okay. So our primarily, we are largely present in urban as of now, with a reach of now 270,000 outlets, which is primarily urban, other than Punjab and HP, where we are widely distributed, both Punjab, both in urban and kind of rural. So on overall basis, our rural share, I don't have exact number, won't be very high at this point of time, but as we progress and expand distribution, so we are entering into semi-urban and rural segment also over the next few quarters.
Right, sir. Thank you. The second question is on the media campaign that you highlighted, and that we will soon be stepping into TV as one of the medias. So, I mean, I'm assuming this campaign would be a national level campaign. Am I right?
So this campaign will be large focused. Yes, it will be in section. But yes, as you know, our weightage as of now is high on the north side, right, for the biscuits. So obviously we need to keep much weightage corresponding to our revenue in the region and the state.
Right. So I think the voice broke, or I lost what you were saying. So am I to understand that it'll still be focused on certain regions and not a national level campaign?
No, obviously it will be focused based on the size of the revenue and potential in different states, right? So selection of whether channels or what program, how much frequency is completely dependent upon the potential and the current size of that particular state.
All right, sir. Right, got it. Understood. Thank you. Thanks a lot.
The next question comes from Nishit Jain with FNG Investments. Please go ahead.
Yeah, thank you for the opportunity. So in our last call, if I can recollect properly, you said that our target is like around 2,400 crores of revenue once our expansions are done in this year as well as the next year. So we still maintain that, right?
No. So last time the question was, after you do all this capacity expansion, what is the maximum revenue achievable by the company? And to which my answer was that once we invest in these expansions, which I just addressed earlier also, the maximum revenue which we will be achieved is 24 to 2,500 crore. It's not that next year we will reach at 24, 25.
Okay, so basically it is at full capacity utilization, it can give 2,400 to 2,500 crores, right? Okay, so also one thing, so as we go forward in next year, so we still feel that our EBITDA will be near about 15-16%, or it can inch ahead more also?
So again, I will repeat. So we as a company are clearly a equity-focused company, and that's what we have demonstrated, that while we focus on growth, we also focus on margins, right? And if you go back a year back, we always said that we want to get to 13-14% EBITDA margin, and by end of the year, the last 2 quarters, we were close to 14% EBITDA. And now we have been maintaining that we want to remain in the range of 14 to 15% because we are a growing company and we also need to invest more in the growth, right? So yes, we as of now maintain over the next few quarters, our endeavor is to consistently deliver in the range of 14 to 15% EBITDA.
Okay, thank you. And last point, so as we are a growing company, so I'm pretty much aware that our employee cost, if you see as in percentage of sales, it will be higher to peers. But if you see our employee cost in FY23 was around 11-12% of sales. And just for reference, in the market leader, if you see their employee cost would be 4% or so. So I don't intend to say the difference is too much. What I mean to say is, going forward in a couple of years maybe, so will that be able to get the cost in percentage to like 8%, 9%? Do you feel that way?
Yes. Over the years, so as of now, because we are in the growth phase, right? So that's why we are investing ahead of the curve. So what happens is that the companies you are referring to, almost 12, 13 of us, right? Size, 12, 13 times ours. So that the scale which that 12 times of us will get on the employee cost will be very different. Second is, so we are at a higher growth trajectory. So thus, we need to invest in people ahead of the curve to keep achieving that kind of growth, right? Over a period of time, there will be always fast periods and slow periods of growth, but it's important that we invest in that capability yes, over a little longer period of time, should our employee costs come down? Definitely, it will and it should both.
Okay.
As a part.
Thank you.
The next question comes from Prakar Suni with Value Research. Please go ahead.
Hello.
Yeah.
Am I audible?
Yes.
Yeah. Hi. Thanks for taking my question. My question is pertaining to for the capex and the expansion plan. So, as just now it was said that you said that you are investing ahead of the curve. And on contrary, just now what previous conversation was, I think Ishan quoted that we are refraining from expanding to new geographies because of capacity constraint in bakery segment. So, can you throw some more light on this? Because these two statements are quite...
No. So what I think I'll just first clarify what Ishan said was that we added a capacity to NCR, which will help us grow faster and getting into new territories outside the NCR region, right? Whether the region of whether Haryana, whether the region of Rajasthan, or Punjab, right? So we had expanded well in the last financial year, the upper country, but there's a potential there is much, much higher. So that's what he said. Now we are also going to the Bhiwadi plant in this quarter, and that would further strengthen the expansion in the upcountry territory of northern India, right?
In our existing geographies, we are not facing any capacity constraint to meet the demand, or is that the case anywhere in either of the segments of biscuit or?
No. So no, in our existing territory, whether Bangalore, Bombay, or NCR, as of now, we are not kind of short of capacity in terms of our English Oven growth or others. But yes, we are investing there in Bombay to be ready for the future growth, because any kind of investment in capacity has to be done ahead of the curve for next few years, almost 5 to 6 years time. So that's the reason we're investing, because Bombay is a very big market, and we are a premium bakery player there, and customers enjoy our bread. So we need to give them the best and be ready to service the growth and the demand over the next 5 years. And that's the reason we're investing in a state-of-the-art plant in Khopoli.
Okay. And my one question is related to the capex. Like, how do we look forward to funding the capex? Will it be through internal accruals, or will we need debt for any expansion which we are looking forward?
So we will be keeping a mix of our own funds and debt, which is bank loans. And the bank loans will be around 65 approximately percentage on an approximate basis, and the balance will be our own funds. So that's the kind of ratio we will maintain to fund. As of now, we're very comfortable on our debt equity ratio of 0.24%. And so that's how we will be taking it forward in terms of capex funding.
Okay. And just my one last question, that was relating to this DMS which you will be implementing. So that is for, as you said, it's for better inventory management at the distributor front. So any challenges we are facing as per the product mix shortages which are not available at dealer front, and they are not able to fulfill the demand in the market as of now, or is it like as a future growth perspective we are doing that?
So in terms of our distributors, they maintain around 3 weeks of stock to ensure the stocks are available. But to get further efficiency into large distributor base, it is very important that we are connected them to the purchasing, both on order processing, stock availability, secondary schemes. And that's the reason we are implementing DMS. And we are implementing DMS with partner being largest DMS provider here. We work with great companies, right? And that will also further help in the coming years to also integrate this with SFA and also further, start adding the analytics to that, because as we see this good amount of data technology enables analytics to performance further. So that's roadmap. We started with it. We are on DMS now. And while we get into seeing some benefit of DMS next financial year, we will further start adding analytics to that. And that's how the journey will build up.
Thank you very much, sir. In the interest of time, that was our last question. I would now like to hand the conference over to Mr. Anup Bector for his closing comments.
Thank you so much for participating in the conference, and I hope we have been able to satisfy all the questions. And in case still there are any questions, you are please free to connect to our investment relationship partners. And we wish you a very, very happy Diwali, and thank you so much again.
Thank you very much, sir. In case of any further query, you may write to parth.patel linkintime.co.in. On behalf of Mrs. Bectors Food Specialties, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
Thank you.